What's going on, guys? Welcome back to the channel. My name is Mark and this is 360 Finance. Hope you all had a Merry Christmas and a Happy New Year. It's time to get back into some stock talk. In today's video, we're going to be discussing Tesla and specifically whether I still think Tesla is a buy. If you look at this company, it really, took off this year. It is up something incredible, like 700%. And its price graph almost looks like very similar to, Apple or Microsoft or maybe even Facebook. No, not so much Facebook, but anyways, these amazing companies that have stood the test of time and have seen a couple years where just their value just shot up like crazy. On top of that, Apple's also getting in the car business. If you haven't heard of, they're going to be starting to build their own electric vehicle and hopefully making some sort of breakthrough with batteries or some sort of other technology. But anyways, my point here is look at Tesla's price graph, look at Apple's price graph, look at Microsoft's price graph. It's basically the same thing. It goes straight up and it's never coming down. Elon Musk, one of the most formidable CEOs on the planet right now. Okay, specifically what I want to talk about today is I'm going to go through Tesla's competition in depth. We're not going to go through the financials of every company, but we're going to look at the EV market on a global scale. We're going to look at Tesla's main competitors as well as their upstart competition. And I'm going to briefly go over Tesla's financials as well, although I don't really feel that Tesla's financials play into its value. It's more so on the amount of cars they have delivered or just what the macro level electric vehicle market looks like in general. So before we get started, I'd just like to let you guys know that over 90% of you guys that watch this content actually aren't subscribed to the channel. If you aren't and you do enjoy this content, please at least consider subscribing. It helps me out quite a bit and I do greatly appreciate it. Okay, so first things first, let's look at the electric vehicle geographic distribution. You can see here that the Eurozone as well as China are the larger markets currently on the planet, and the US is actually contracting year over year. So what I'm going to show you is basically just some of the macro level statistics of the electric vehicle market, and you can see here obviously it's growing. I don't think that's a surprise to anybody, as we millennials become a larger portion of the workforce and we move towards environmentally and socially friendly countries. ESG becomes ever more important in investing, and I think ESG is one of the main things that caused Tesla to explode this year because they're one of the main electric vehicle producers on the planet. And everybody started seeing Teslas driving around all over the world, and boom, the stock took off. The European Union's energy mix is increasingly turning to renewables, as you can see in this graph here. So that's very important to take note of, and I think that's a trend that we'll continue to see worldwide. Global electric car stock, okay, here you can see again, it's like an exponential graph. It's just going straight up, and you can see the distribution between HEVs, PHEVs, BEVs, and FCEVs, which are hybrid electric vehicles, plug-in electric vehicles, battery electric vehicles, which is the most common one, and then fuel cell electric vehicles. Also, the private electric chargers by country and the public electric chargers by country, China absolutely dominating in those, so it's been a very good thing that Elon Musk has diversified Tesla's portfolio into China and sees them as a main partner moving forward. Anyways, the main part of this video is going to be us going through all of Tesla's competition, so let's just go ahead and do that right now. It's about 10 minutes long and transition. Okay, so now we're going to go and take a look at some of the most recent statements from Tesla's existing competition. And what I've done here is I've gone through probably the 10 most well-known automakers on the planet and kind of just aggregated all their responses to what they see as the future of the EV market and also what their plans are to enter this market. Okay, so the first company is Toyota, and they've announced plans to generate half of its sales from electrified vehicles by 2025, which is 5 years earlier than they had previously estimated. So despite having their own battery making operation as well, Toyota is also expected to partner with Chinese battery manufacturers in order to meet demand. Volkswagen Group said it will spend more than $30 billion developing electric vehicles by 2023. The manufacturer also aims for electric vehicles to make up 40% of its global fleet by 2030. And not to mention, they also plan to reach a target of 1 million electric cars produced by the end of 2023. So that's 2 years ahead of their prior predictions. As you're seeing right away, existing competition are moving up deadlines. Moving on to General Motors here, they have recently said that their Cadillac will be their lead brand when it comes to EVs, and Cadillac's president said the majority of the brand's models would be electric by 2030, and left open the possibility that the lineup would go entirely electric by then. He also confirmed that Cadillac would roll out a large Escalade-like electric SUV, which its experts begin to manufacture in late 2023. Ford last year unveiled the Mustang Mach-E, an electric crossover that gets its name from the company's iconic sports car. But that wasn't the only EV Ford had plans for. In 2018, Ford's CEO said an increased investment in electric car initiatives would result in a 2022 model lineup that includes 40 electric vehicles and electrified vehicles. In 2019, Ford Europe also said they will offer an electric option for all of its future nameplates and announced at the Detroit Auto Show that a fully electric F-150 will launch in the coming years. The Blue Oval also showed off a lineup of 17 hybrids and EVs, both familiar haulers and commercial vehicles. It plans to bring it to the European market by 2024. Volvo released its first electric vehicle, the XC40 Recharge, which it expects will go on sale in the US in the fourth quarter of 2020. The brand also doubled down on its pledge to generate 50% of its global sales from EVs by 2025. And they also promised in the same year it will reduce the total carbon footprint of each vehicle manufactured by 40%. Plus, they also said it will release a new EV every year for the next 5 years. This is all part of the Swedish company's plan to become fully climate neutral by 2040. Honda revealed its Honda e-City car in 2019 and also said every model it sells in Europe will be at least partially electrified by 2022. That's a big jump from Honda's earlier projections of a full lineup of electrified cars by 2025. The fully electric Honda E and hybrid Jazz, known as the Fit to US consumers, will jumpstart the initiative. BMW Group, in 2017, they projected that electrified vehicles, a term that doesn't necessarily equate to fully electrified vehicles, would account for 15 to 25% of their sales by 2025. In working towards that projection, BMW Group unveiled the electric Mini Cooper SE last year, targeting it towards urban mobility. In June, the Bavarian brand said it will offer 25 electric vehicles by 2023, 2 years earlier than it had initially planned. One of those new models, an electric version of the 1 Series hatchback, may arrive as early as 2021. BMW also projects a twofold increase in electrified vehicle sales by 2021 as compared with 2019, and a 30% growth in those sales year over year through 2025. Nissan launched the Leaf Plus with a longer range last year and plans to introduce 8 new electric cars by 2022. At last year's Tokyo Motor Show, the brand unveiled the concept version of the new Ariya EV, and Car and Driver reported late last year that a production version could make it to the US by 2021. Nissan claims the high-performance crossover will travel 300 miles on a single charge and go from 0 to 60 in less than 5 seconds. Fiat Chrysler. In 2018, Fiat Chrysler announced it would invest $10.5 billion in electrification through 2022. By that year, FCA plans to offer at least 12 hybrid and all-electric powertrain options and launch more than 30 electrified nameplates. As part of that effort, the company announced a $4.5 billion investment in new and existing plants last year that would allow it to produce at least 4 plug-in hybrid Jeep models. Fiat Chrysler also began making good on that promise when it displayed plug-in hybrid versions of the Compass, Renegade, and Wrangler at the Consumer Electronics Show earlier this month. And last but not least, for existing competition, we have Daimler, and in 2017, Daimler, the parent company to Mercedes-Benz, unveiled plans to plunge more than $11 billion into developing its EQ series of electric cars, with the aim of introducing more than 10 EVs by 2022. The company also plans to offer at least 1 electric option in every Mercedes-Benz model series. Last year, Daimler confirmed that an all-electric G-Wagon is in the works. Okay, now that we've gone through their existing competition, let's take a look at their upstart competition. Okay, so these are companies that are kind of new to the electric vehicle market and kind of the hot name on the stock market, if you will. Okay, so let's go through. I have 6 of them here. Some of them you'll probably recognize for sure. You know, Neo, Nikola, Workhorse. Those ones I've seen all over YouTube and all over the internet. But the first one I have here is Li Auto. And one of Tesla's newest competitors is a Chinese car company, Li Auto, which went public. And investors are clearly eager to learn more about Li's range extending generator, which is a small onboard gasoline generator that recharges the One, which is Li's flagship compact SUV. Given the car range of 500 miles, an impressive technological feat, this hybrid approach is perfect for an EV in China, where charging station networks have yet to be built out, causing a bit of range anxiety, which limits use cases and impedes the wider acceptance of the BEVs. Founded in 2015, Li has grown quickly in China, selling more than 10,001 since production began in November 2019, and a new listing in the US means more money to fund future growth. NIO, okay, in August, Chinese EV maker NIO made a bold statement. The company will begin selling its battery-powered cars without batteries. The electric batteries in an EV are one of the most expensive components in the vehicle. By selling an EV without a battery, NIO can effectively reduce the price of its cheapest model, the ES6 SUV, by around 25%. That's a big difference for consumers who may be hesitating on the EV price threshold. NIO customers will instead get access to NIO's battery swapping stations where they can exchange spent batteries for fresh ones. The success of this system is predicated on NIO's network. With just 143 battery stations in China, the company still has plenty of room to grow. And that's exactly what it's doing, with vehicle sales up 146% year over year in the second quarter. Nikola, probably another one that you guys would have heard about. Competing with Tesla is just business, but ripping off Tesla's name, now that's just mean, okay? So Nikola gets points for originality by combining electric battery power with hydrogen fuel cells in its vehicles. Putting the two together gives Nikola automobiles some serious range. The company's forthcoming Badger pickup truck will be able to drive 600 miles on a single charge, which is an impressive distance for an EV that few competitors can beat. However, we know that Nikola's main focus will be on big rigs, with an all-electric truck hitting the road in 2021 and a hydrogen fuel-powered Semi debuting in 2023. These trucks will be sharing the road with Tesla's Semi Beginner in 2021, but Nikola has had a good start. The company has signed a deal to provide Anheuser-Busch or Budweiser with 800 trucks to make zero-emission beer deliveries around the country. Workhorse Group, another one you guys may or may not have heard of. Nikola isn't the only EV company out here focusing on commercial vehicles. Workhorse builds electric vans that the company wants to position for last mile delivery services, though it has had a few successes so far. The company did enjoy a 950 van order from UPS back in 2018, and if the global delivery giant likes what it sees with the test batch, then Workhorse will be off and running. In the meantime, Workhorse is bidding on a contract to modernize the United States Postal Service's fleet of 163,000 long life vehicles, and its recent admittance to the Russell 3000 index back in June means more investors are taking a look at the company more than ever. Workhorse is still a small company with the goal of producing 300 to 400 vehicles in 2020, but the company has big plans and even bigger opportunities ahead. Canoo Holdings, the latest entrant in the EV race, is Canoo, which is going public later this year thanks to a reverse merger with special purpose acquisition company Hennessy Capital Acquisition Corp. In a market that seems to get more crowded by the day, Canoo is setting itself apart. For instance, when its consumer vehicle hits the road in 2022, you won't buy or lease it. Instead, drivers will be charged a monthly subscription fee for Canoo cars. Interesting. As well as insurance and access to recharging stations. Canoo plans to target young professionals with this unique value proposition, but in the meantime, the company will utilize its skateboard chassis technology to bring in revenue. The company has partnered with Hyundai and Kia to produce these modular, low-profile chassis, lowering costs for EV production and providing Canoo with a foot in the door of a very competitive industry. Lordstown Motors. Much like EVs, SPACs are all the rage these days, and Diamond Peak Holdings Corp isn't about to miss out on the fun. The SPAC, Special Purpose Acquisition Company, has agreed to a merger with Lordstown Motor to bring the company public, which is actually great news for Workhorse. The company has a 10% stake in Lordstown. Lordstown will be bringing its all-electric pickup truck Endurance to market in 2021, and the company will focus on selling it business-to-business clients rather than consumers. Endurance's 4 electric motors, one in each wheel, are a unique feature and could help explain the roughly $1.4 billion in pre-orders for the truck. It's a great start for the company, valued at about $1.6, but considering that Tesla's Cybertruck has more than 650,000 pre-orders, Lordstown has a long way to catch up. Now that we have a good idea of how much competition is coming into this market, let's just take a quick look at Tesla's financials and see if they're going to be able to withstand the increasing pressure of their rivals. Okay, so the first thing is they turned over their first operating profit in 2019. Extremely significant because this is a company that's been public since I believe 2012, and it took them 7 years to turn a profit, and they're finally, delivering 500,000 vehicles worldwide. So 2020 going to be their first profitable year. Their next earnings call is going to be January 27th, so that's going to be a very important date for them, as we'll get the full picture of their 2020 earnings. And I expect them to be great, but one thing to take note of is that their EPS targets keep going up, and that's going to just increase the challenge every single time. They're the leader in this market currently, and that's going to push them to raise the bar every single time. The balance sheet, their current ratio is healthy, sitting at 1.63 as of last quarter, and they 100% have enough cash to extinguish all of their debt if required. Their debt's also being repaid consistently, especially this year, and their free cash flow generated is expected to continue growing. Again, the main statistic to take note of with Tesla is their deliveries, and like I said, they've delivered over 500,000 vehicles during a pandemic year. Incredible. But at the end of the day, it's not about how well the company is doing, it's about if there's value to be bought in this stock, okay? So this company has already gone up 700% this year, and this isn't a company that I would be betting against, but I don't know if the value is there to be had moving forward. At the same time, I probably would have said the same thing about Apple back in like 2011, 2012, and it's continued to go up. Same thing with Microsoft, and same thing with all those other big tech giants. This is not a company I would never bet against Elon Musk. I just don't know if the value is there to be had currently. So I hope you guys enjoyed this video. If you did, don't forget to smash the like button, subscribe to the channel, and I'll see you guys in the next video. Peace.
Young age, learn how to get paid. Big stage, long way from session A. Big wave, he gon' have to get saved.